Hi, welcome to the Market Alert for Friday, the 7th of June 2019. Yesterday, bonds and bullion bid as investors buy defensive stocks at a 2019 record pace. So the Dow continues to move higher, and as we move into yesterday's activity, as we saw in the alert, the market trading down to the 200 bar moving average. The market bounces off this and then it just sails higher. Now this is the same pattern that we saw the day before. So we have a new pattern emerging at the moment over the last few days in the Dow, and it's having the ability to recognize when things are starting to change as far as the patterns are concerned. So the market's bid higher, trades sideways, and then prior to the main event, you see the market coming down to the 200 bar moving average. But in this area here, this is the bit that's interesting, is really a duplicate of what we actually saw on Wednesday when the market had this battle. Eventually, the market broke above the 200 bar moving average and prices then moved higher, retraced, and then moved higher. And as you'll see as we go forward, the market then trading higher once more off the 200 bar moving average. Major support area this is. It's quite amazing. And then prices sharply higher in the run up to the close, and overnight you will see that prices are once again moving to the upside. I'll just bring this across here. You can see precisely this. So we're a long way from the 200 bar moving average now. So in the daily chart, we're heading to the 76% retracement, 25,804. We are no doubt going to go through this at some point today and then head up towards where the previous selling took place, which is at 25,956. So make it 26,000 and keep it simple, psychological level. Is there any news that will allow it to do this? Well, we've got the non-farm employment today. This is showing to tick slightly lower than the previous, so we'll wait and see what happens there. Unemployment rate to remain unchanged at 3.6, and average hourly earnings also at 0.3 and 0.2. So let's see how the market is impacted by this. At 1:30, what will be interesting to see if they can run the market before the news, as they've done in the last couple of days. So keep an eye on that in the pre-market session. With regards to the pound, there's not a lot happening. There was a by-election last night in Peterborough. Labour won it. No surprise really there, but no major impact on the pound, which is what you would expect. So nothing to report as far as the pound is concerned. You can see this yesterday, very quiet, down, up, 76% retracement, eventually moving higher as the US dollar moved lower there. And in Bitcoin, the retracement is still in force, but support being found in yesterday's low. When you look at the detail as well, the market, again, this battle around the 200 bar moving average, creating a couple of losing trades, which is why I'm saying you're better off waiting for the market to break, come back, and then go that way. And the same on the upside, come back and then go up. It is a pattern that is starting to appear, and here you see the market comes back towards the 200 bar moving average, and then you get the sell signal, and then prices move low, and we're never going to buy it back at the moment because we're switching from a bear to a bullish market. And then the 200 bar moving average in the 4-hour chart, you can see exactly why prices have bounced back. So again, that 200 bar, if it's not in the time frame you're actually looking at, go and have a look at a smaller time frame and you will find the market stopping at this particular level. So in the daily chart, the market sideways, holding support there, as we can see from across here for this market. So let's have a quick look at the implied volatility, 14.59 the day before. Let's refresh this, down at 14.32, not down an awful lot, 59 down to 32 for yesterday. So there's a bit of an interesting signal there as well, that the market may be slightly concerned that it may be moving higher as we're starting to see here. We know it's going up on fresh air, and the apparently investors buying defensive stocks, but we'll see. It's this area is going to be crucial at the 26,000 area, as I mentioned earlier. So that's an interesting one. And Deutsche Bank, yes, yesterday we put in a new low at 661, heading towards that $6.40. We'll see what happens if it gets to this level. And the yield curve for yesterday, let me just refresh this just in case it's not been updated. And once again, we see we are, and just get rid of this nonsense at the bottom and just bring that back. So yeah, we're still inverted out to the 20-year. If I can bring that up, there you go, so you can see it. So as long as this remains, the prospect of recession going forward is a lot higher. So you can see there, just above the 20 level with the 20-year yield at the moment. So all indications there for problems coming down the line. Okay, let's see what the non-farm payrolls are. Have a look at the Dow in the pre-market session just to see if you're going to get that. If you get that rise to the upside, and then the non-farm payrolls are better than expected, then the market is going to take advantage of this and drive prices higher. So again, there is a new sort of pattern developing at the moment, and then there's the toing and froing and the battle between the longs and shorts at the open for the first half hour. So we'll see how things pan out there. Okay, that will do it for this one. As ever, thanks for watching. See you in the next one.